Pablo, come on in, buddy. Come on in, Pablo. All right, good. We got, so there we go. Hey, Bob. Hey, Rick. What's going on? How are you guys? Hold on just a second. We're going to use my board here later, here in just a second. I want to share with you an example of a lady I was talking to today when it comes to Social Security. I hope everybody else got the message. I think I put it out there, the link in the first email I did. I hope I did. Why are they doing like that? Hey, Rick.
Yes, I didn't get it in the first email, but I got your second one. So.
That's what I was worried about. Oh man. All right. Well, thanks. Yeah, there we go. Jimmy said we need a link. All right. I'm gonna get off here for you for just a second, Rick, and I'm gonna send these guys this link directly. Hold on just a second. All right, so we got a couple of people on there. All right, cool. So Arvin, Dan, Rick, you all got the link. Geez Louise. Hopefully everyone gets the email. You might hear my son in the background there. He's playing his electronics. All right, hold on just a second. Get Nick and Sandra, Que Paso. All right, all right. So we got John here, Boink. Submit. All right, looks like. All right, all right. Did I send that to him? All right, gotcha. Hey, Pablo. All right. All right, hold on just a I think we got everyone there. All right. Hopefully more people will get that. Oh wait, I gotta go back to more. Chill. And Bob's on there. Okay, good. We got him. All right, good. All right, submit there. Bob already got it. All right. Looks good. Did I send to this guy? Can't remember. Boink. Send it to him again. All right, Warren, right on. And Ward Bay, or yeah, Bay. Okay, good. All right, looks like people are finding their way here. That's good. So you're not actually hearing any audio? Okay, cool. Anybody else not hearing any? Well, I guess you wouldn't if you didn't hear that. Okay, cool. All right, so all right, cool. All right, sweet. All right, we'll just hang tight here for just a second, guys. So I got the best wife ever. You know who she's on the phone with right now? My wife is on the phone with right now. We'll try a different route. Okay. She is on the phone on the Larry Elder show because Thomas Sowell is being interviewed right now, and my wife is on the phone with her, waiting to get online so she can wish Thomas Sowell a happy birthday. Thomas Sowell is I mean, I tell you, man, that guy. That guy is just one of my heroes of all time. I love Thomas Sowell. I'm a big fan of. All right, cool. So Sandra, you can hear it. It looks like you can. I love Thomas Sowell, and just my wife getting on the horn to talk to a nationally syndicated radio program just shows you how much Thomas Sowell means to our family, which is crazy because she would never do that. She's not. Nick has been talking. Oh, okay, gotcha. Yeah, man, Thomas Sowell is friggin'. I got a signed book from him actually. I sent him something to sign, one of his books he had written. I think it was Race and Economics. And I said, how do you, because I hate the race war crap. I hate it with a passion. But I said, it's almost like they're trying deliberately to divide us into races. And most whites don't want to be part of that crap. Most blacks don't want to be part of that crap. It is propaganda. I said, so how did you, Thomas Sowell, and Thomas Sowell was a Marxist growing up. I said, how did you emerge from that and not be, I don't know. And he sent me a book as a man of letters he sent to me, and he signed that one as well. So it was great. So because no one want to be no one wants to be part of the racist crap, man. No one wants that. I can't think of anything more disgusting than to sit there and say my skin is a uniform. I mean, how evil. That's just to the very pit of my soul. It's annoying to me. And yet, why would you want to throw in with people who just have nothing in common with you except for skin? And even then, your skin's not. I mean, what is it? Italian, a white guy? Because he's lighter skinned than me. Anyway, I don't like that crap, and that's my biggest concern is that these people are trying to make us tribal, and I think it's evil, but it's Marxist. Marxist is evil, and that's all there is to it. For you guys who are new here, remember when you go on chat, make sure you hit all. So you'll see if you hit 2, it'll be a drop down. It'll say all panelists, and you want to make sure you do all panelists and attendees. Because I'm the only panelist, you guys are all attendees. So if you put on a chat thing, make sure you hit all panelists and attendees on the chat. I don't know if you guys are or not. Oh, yeah, yes. All right. I can see you are. So, Sandra, you just did all panelists, and that's fine if you don't want everybody to see it. But just, Arvin, you did the same thing too. No, you didn't. All right, cool. You did all panelists and attendees. So just make sure in the chat you click the drop down that says all panelists and attendees. Right on. And burnt on the outside, but white inside. Says Arvin. Arvin's coconut brown and burnt on the outside, but white on the inside. Oh man, that's funny. Right on. It's good to be able to laugh, man. I tell you, geez Louise. Actually, Thomas Sowell's got this video on his book. I'll show it to you if I can. It's hold on a sec. We look at my history. Yeah, my eyes. Geez Louise, am I getting old? I'm turning 50 this week, my friends. 50. It's over, right? So this is Thomas Sowell's A Brief History of the Irish. That's Thomas Sowell. And look, England execute prisoner of war, and it's from the war on SJWs. I don't know who those people are. I'm not even subscribed. I probably should. But anyway, Thomas Sowell's Brief History of the Irish. I think he might have written a book on that. It's actually pretty interesting when you think about it. During the Cromwell times, the Irish Catholics uprising, and then Oliver Cromwell during the late 1600s, what do you say? 40% of the Irish population died in the wars, and then on top of that, from the famine that resulted from it, 40% of the population died. Crazy. Thanks, Al. Yeah, man, 50 years young. It's on July 7th. Crazy. It's I was telling my daughter, I said, I probably got, 35 years left to live. And she's like, oh, that's sad. I said, it's all good, though. I mean, at the end of the day, first 50 are all in the bag, and the next, who knows how long. But, you enjoy it. Actually, hold on just a second. I want to see if and I want to get on. Okay. Nah, she doesn't look like she's gotten in yet. Not 78. No, right on. And it's funny as you get older. I told my kids that today. As you get older, just relax. It's just chill. The hardest time was in the 30s for me so far. That's for sure. We had no money, not a pot to pee in. We had a mortgage, and even back then, our mortgage in our house in Dayton, Virginia, we had 3-bed, 1-bath house, ranch house that looked like a double wide. It wasn't though, it was a ranch. And the bedrooms were quite small, like the master bedroom. Can you even say master bedroom anymore? The master bedroom was, I mean, hell, I don't even think it was 10 by 10. Yeah, I can't remember. But anyway, tiny little house. And anyway, and we still had a mortgage of like $600 a month on that. And we had a couple car loans and stuff. Woo! And then we had, 2 kids sprouted at the beginning of the decade, and then 2 kids sprouted at the end. Woo! That was a tough time. So you got the debt, you're not making much money, and then you got the kids. And come here, buddy. Come here. Oh yeah, good boy. Pablo wants to say hello. Oh, there we go. Oh, there he is. Al's hit 66 in 10 days. And that was nerve-wracking when you're in your 30s, you got no money. You know what I'm saying? It's scary time. And then you get through it. Next thing you know, when you're in your 40s, you're starting to make a little bit of money. I think it'd be tough if you're in your 40s, you're not making much money, because that's, theoretically when you're supposed to be making the money. If you're not, you're like, what happens next? But you just got to hang in there, man. Things change. Ain't that right, big man? You never know. Don't forget Pablo. He had no family a year ago. He was out on his own, this guy. And now look at him now. All right, Pablo. Did you see the thing I put us on the community tab on the Facebook, on YouTube, with Chloe was holding Pablo? He's like, someone save me. Oh, Pablo's star, yeah. This guy, I love him. All right. So just real quick, don't forget, if you have questions and you want to talk, you want to grab the mic, you just raise your hand. I'll turn the mic over to you. I'm going to get on this back here, the whiteboard, for just a second. Ooh, I hope you guys can hear that. We'll see. I want to get on because I want to go over. I was talking to a lady today, and I'm not obviously going to share her name or anything, but this might not be consequential to some of you guys. To some of you guys, but it could be. And I want to just revisit the Social Security taxation on things in terms of how it worked, because I think it's important. Like, this lady was inclined, I don't want to say make a mistake, but she was inclined to do what I suggested she not do. And anyway, so excuse me, buddy. So let me move this table. I'm gonna put hold on just a second. Oh, hey, can you out of here, buddy? Thank you. All right, so let me get that guy out. I'm gonna put this right here, and I'm gonna bring that up. Yeah, excuse me, Pops. Excuse me, Pablo. What's Daddy doing, Pablo? What's Daddy doing? I'm gonna put this guy up. All right, look at that, classy. It's not really, well, that'll do the job. I'm thinking, why is it coming on like that? It should be kind of like, 1 second there. Well, I guess that'll do the job. All right, kind of, sort of. It'll be all right. All right, so can you still hear me okay? I hope so. It doesn't go up any more than that. All right, so we're going to take our trusty pointer, PVC pipe. This is 1 inch, not a quarter, 3/4 of an inch. 3/4 inch PVC, I think, or maybe 1/2 inch. All right, so this lady, she's married, filing jointly. She was 67. She has a 401k of $250, no mortgage at all. All right, so let me just make sure. If someone say if you can hear me okay, if you don't mind. Okay, cool. Right, sweet. All right, so she's married, filing jointly. I'm not sure how old her husband was, but I imagine in the late 60s, if not 70s. Married, filing jointly, and they have $500 a month pension from the husband. The husband has $2,000 a month in Social Security. What are you doing over there, buddy? Okay. And she's getting her spousal benefit of $800 a month, $800 a month. So if we take our trusty calculator and we times all these together, that's 3,300. That means her income, 3,300 times 12, is 39,600 is their annual income. 39,600 income. All right. Annual. Now, once she hits 70, I think she said she's going to get $2,000 a month in Social Security as well. All right. So at 70, because this is her spousal income. They'll go to 2,000. But she's not at 70. So she wanted to do, and she wanted to hire me, and I said, you don't need to, because you shouldn't do what you're thinking what she wants to do. She wants to start doing, she wanted to do one big Roth conversion, one big one. I said, no, don't do that. But she wanted to take the whole 250 and move it to Roth. She wanted to do, but she's going to do something else with it too, which I don't want to get into about that. So I don't think you should, but whatever. I mean, it's her money. She do whatever she wants, whatever makes her comfortable. But anyway, she wanted to move that on to one Roth. I said, don't do that. So now I want to go over to how the taxation on this works. So basically what happens here is we know for a fact we have 2,800 times 12 is 33,600 of her. That's 33,600 right here. We times that, we divide that by half, right, to get how much of her Social Security is subject to taxation. This is the provisional income. Divide that by 2. That's 16,800. All right, so 16,800. That's their Social Security that we look into the provisional income to figure out how much of Social Security is subject to taxation. Plus this, which is $6,000. All right, it's 22,800. All right, so $22,800 is their provisional income, and we know that the first $32,000 if you're married filing jointly. So if you have 32,000 or less of your provisional income, none of your Social Security is taxed. Does that make sense? I hope that makes sense. So basically, she has 22,800. The first 32,000, zero of this amount here is subject to taxation. Not one thing is subject to taxation. So that means the only thing that's subject to taxation would be the pension, which is $6,000. But because their standard deduction is $27,000, they don't have any taxation whatsoever. I hope that makes sense. So let's keep going, because right now they owe no taxes, none. Right. So let's just keep going here. All right. So what I told the lady to do, I said, look, don't take one lump sum and move it to a Roth. What you should do is start pulling money out, and $30,000 a year. And I was driving in my car while we're talking, so I wasn't exactly sure what $30,000 if she did that would do. But in terms of taking money out and avoiding as much taxes as you can, I think 30,000, 25, maybe 30 would sound like a good number. So what I wanted to do is when I got home, I wanted to see what $30,000 of a distribution would be. Now you can put it to Roth if you want. She wants to buy some. She wants to buy some precious metals, is what she wants to do, like real bullion. I don't know. I mean, whatever. She doesn't have a mortgage. She doesn't have any debt. Her and her husband, so they can do whatever you want. But I don't know. I think all these people are overplaying the dollar, just dropping in value. Where's the evidence of that? Show me some evidence of it, please. I just don't see it. They'll say, well, inflation eats, inflation will eat over the course of 20 years at just a basic inflation of 2 to 3% will eat half of your purchasing power. Well, I mean, that's already baked into the pie here. It really is. I just don't think that's nothing. I mean, that's a 2 or 3% inflation. That's what the target is. That's no big deal. And people use silliness like after World War II, you lost 50% of your purchasing power over the next 10 years. That's just not true. There's no, but even if that were true, that's still a 4% inflation rate. that A, didn't happen. B, that's not hyperinflation. It's just the nature of inflation. You lose purchasing power each and every year because of the inflationary economy that we live in. That just is, I don't get why this is such a concern. We're not, there's basic inflation eats away your assets. That's a fact. But it's not like the dollar is losing value relative to the world economy. It's just it's already been baked in. It's just an odd thing to do. But people got to make a living somehow. People got to make a living somehow. So I guess they make a living on saying You're going to wake up one day and your dollar won't be able to buy as much. Well, welcome to the world of what the Federal Reserve is tasked to do, which is, you can argue against it. All right. So now let's do this. We know they had 39,600, of which 39,600 was their income, of which 33,600 was Social Security, 6,000 was the pension. And now we're going to do a $30,000 distribution from the 401k. All right. So the first thing we're going to do here is we're going to take half of this, and that is going to give us, I forgot, it's going to give us 16,800. So first thing, we're going to take half the Social Security, 16,800, plus $36,000 from the pension and from the 401k distribution of $30,000 bucks. So 30,000, 36,000. All right. So we got 16,800 plus $36,000. That's 52,800. 52,800. All right. So now their provisional income, again, it's half of Social Security plus any other income that you have. In this case, it's the money she's taken from her 401k and the pension she has. So her provisional income, again, the point about provisional income is only to figure out how much of this is going to be subject to taxation. That's what we're trying to figure out here. That's all we're trying to figure out. It has nothing to do with anything else. So 52,800 is provisional income. All right. So now what we're going to do is we're going to get a new pen here. Let's see. Maybe this. Try this brown. All right. So 32. So the first. So we'll get in that. So for 32,000 to 0 to 32,000 for married people is none of that subject to taxation. Well, we're already at 52,800, so we're above that. 32 to 44, 50% of that amount is subject to taxation. Above 44, 85% of that is subject to taxation. That's for married people. For single people, it's 0 to 25, 25 to 34, and above 34, 85% of that. All right. So again, when we talk about the widow's tax trap, it's more than just income tax. It's also tax on Social Security as well, because you lose, you have to pay more tax on your Social Security. All right. So in this case, we have 52,800. The first 32,000 is not subject to any taxation, all right? So that leaves us the next 12,000 is subject, 6,000 of that is in part of your provisional income, which will be subject to Social Security taxation. All right, so that leaves us 20,000 bucks, right? Yeah, 20,000, no, 10, that leaves us 8,000, let me get my trusty calculator, I don't know, 44,000 minus 52,000, 52,800 minus $44,000. That's 8,800. That's tax. That's 8,800 at 85%. 8,800 times 0.85 equals 7,480. All right. So in this case, we take these and we have $13,480 is of their Social Security subject to taxation. $13,480 for a married couple. We'll do a single couple next, or a single person next. All right, so we take $13,480, we add it. All right, we add this to this right here because that was the amount she took from her 401k plus the pension. All right, so let's erase this and come back around. All right, so we're going to take my trusty erase thing. There we go. All right, so remember, we got 13,480 is the amount of Social Security subject to taxation. So that's, it's about what, 35% of our total Social Security subject to taxation. Not too shabby. All right, so we got 36,000. Right now. So now what we're trying to do, there we go. We got $36,000 from her pension and from the amount coming out of the IRA, plus the $13,480. That will give us her AGI. All right, so we got 36 plus 13,480. That's 49,480. All right, so that's their AGI, 49,480 minus 27,000 bucks, or what? I don't even know what the standard. I think it's 27,400 maybe. I'm not sure. It doesn't. In this case, who cares? So that's 22,480. All right, the first 19,000 will be minus 19,000 times 10%, and we're just going to say 3,480 times 12%, so that's 1,900, and 3,480 times 12, because that's a tax brackets, times 0.12, that's $417. So that's what, 2317. All right. So essentially, what happened here is there. Did I miss something, Arvin? You got 417 with the 417. Where's the? Am I missing something here? Okay. I got you. Okay, cool. So we're basically tracking. So basically what's happening here is taking that $30,000 out costs her $2,300 of taxation, simply because because she had no taxes before. Does that make sense? Because when she did not take that $30,000 out, she had no taxes. So in this case, we take our trusty calculator and we say, what is the effective tax rate on that distribution? And we take 2317, divide that by $30,000, it's a 7.7%. So essentially that put her in, went from 0 to 7.7. Now it's going to go up the more she takes from that account right there. Oh, you guys can't see what I'm pointing at. That account right there, the more that effective tax rate is going to be, because the more the Social Security will come out taxed. So in this case, let's go ahead and do a 25,000 just because I like this stuff. I know you guys might be getting bored, but I want to do 25,000 just to see. We'll see what it looks like. So let's keep going back. So what we could say is, at the end of the day, is it worth it to take 30,000 out? Well, let's say you're gonna have to pay $2,300 in tax, roughly. Yeah, and that's not including whatever state tax. And presumably, because her income is so low, there won't be any state tax, if that makes sense, even if she lives in California. Let's pretend she does. But at the end of the day, we're saying, okay, so you're going to pay $2,300 to take $30,000 out. Is that worth it? Yeah, probably. You could go buy gold, silver and gold, but you can do whatever you want with the money. And here's what I say there. I said, look now, if you're going to do this in a Roth and buy gold and silver, see, I'm not a fan of this. I know people say all the time, you can have real estate and Roth IRAs and hard bullion. Look, I don't know. I'm not, I know you can. It seems to me to be the pain in the butt. I like liquidity. Liquidity makes sense. And if you can't hold the actual asset, can you even hold it in a Roth? I mean, I don't know. I don't know how that works. And I really don't want to find out. So I just said, look, you're not even trying to leave it to the kids. The Roth, because they're going to have to zero it out in 10 years anyway. Just freaking take the money out, pay tax, and be done with it. Don't even worry about the Roth stuff. Just take the money out, pay tax. And that's what she's going to do. So it's certainly better than taking a full $250,000 out of her 401k in one fell swoop. And by the way, that's all they got. They don't have any other assets. They got no home mortgage, no debt, and $250,000 in 401k. And they're not spending, they're living fine off their Social Security and pension. But you need millions, Josh, millions. I talk to people every single day. They don't have millions and they're retiring just fine. This whole thing that you need millions, it might apply to some, West Coast, East Coast people, but in terms of California and San Francisco, San Jose, and New York City and Boston, it doesn't apply to the vast majority of people. It can't. Because the vast majority of people in America don't make even 6 figures to begin with. It's insanity out there. I hate that. All right, so let's do the same thing, but instead of doing 30,000, let's do 25. All right, so I mean, the funny thing is, once you get accustomed to doing this, it's easy. It's a little bit time consuming, but the whole thing, I probably should have kept with the provisional link. No, I guess it doesn't matter. But I mean, you get used to the 2-step process. It just takes some time. Where's my planning assistant? I heard him. Where'd you go there, assistant? Oh, I'm growing some seeds over here. He's trying to get my little microgreens. Yeah, I see what you're doing there, Big P. All right, so what we're going to do now is we're going to take 25,000 plus the 6 plus, what did I say, 33,600, I think is what it was, 33,600. All right, so we're going to take that half. We know that's 16,800. 16,800 is half of Social Security. So we know we're going to 31,000 plus 16,800 is 47,800. That's their provisional income. All right, let's just use a single, we want to keep it the same. So the provisional income, we know for a fact the first 32,000 is nothing. The next 12,000, 6,000. Oh, thanks, girl. Did Bob get on the phone with Tom Sowell?
No, I didn't get to.
Oh, man.
I know.
Did other people get on the phone with him?
Yeah.
Oh, man. Tell him I'm proud for trying.
Aw. Do you want me to close the door?
Yeah, thanks, girl.
Mhm.
All right, so we know the next 12,000, 6,000 is going to be part of the provisional income numbers for how much Social Security is subject to taxation, and that's going to leave us 3,800. We got to times that by 85, 3,000. Oops. Oh, you want to go out? All right. 3,800 times by 0.85. That's 3230. 3230. All right, so in this case, 9,230 of their Social Security is subject to taxation, plus 31,000. That's going to be their AGI. All right, does that make sense? So we take the Social Security amount that's subject to taxation when you run the provisional numbers, plus the other income, and the other income would be, in this case, the pension and how much they're taking from the IRA. By the way, provisional income numbers, just remember, tax-exempt interest is included in provisional income. Just keep that in mind, all right? So what we're going to do here is we're going to say, okay, so their total AGI are these two numbers. That's going to be their AGI. We're going to do 40,230, all right? So now we subtract that from the standard deduction, and they have we're just going to use 13,000 for simplicity. Times 10%, $1,300 roughly. So their total taxes are $1,300. So what happened here is you can see what's happened. When they took out $30,000, it cost them $2,300 in taxes. When they took out $25,000, it cost them $1,300. So I hope that makes sense, because what's happening here is that extra $5,000 that they took out from their IRA cost them what? Well, it costs them an extra $1,000 in taxes. And this, if you look at it like that, which is how you should look at it, that's a 20% effective tax rate on the extra $5,000. Why? Because they had to pay $1,000 more of taxes for having taken out $5,000 more of income. That's how you get the higher tax bracket, the tax torpedo. It's nuts. And people are like, oh, man, we're going to help the lower middle class. I'm middle class Joe. We're going to help the middle class. Freaking bull crap. You're not helping the middle class Joe. You've been around since 1970s. Haven't done crap for the middle class. But not just him. I mean, all these guys, Republicans too, because they don't know. I mean, look, man, the politicians are just puppets. There's all there is to it. They don't write the freaking bills. I was listening to Tucker Carlson interview Mike Braun from Indiana. It just infuriates me. I recognize how Republicans just are. they're mind-boggling stupid. There's no, I mean, it's just stupid. There's no other way around that. Anyway, the issue is that at the end of the day, none of these guys give two craps. And the reasons, they don't know, they don't care to know. They're out there just living large on money. Why do you think they get out of Congress and they got, Paul Ryan and freaking all these guys are making bank? This thing is nuts. But here you got, so we'll say this lady, Gina, and I don't know her first name, but Gina, it's not Gina, is taking $25,000 out as opposed to $30,000. The extra $5,000 if she's taken out would cost her $1,000 of taxes. That's a 20% effective tax rate on the extra $5,000. You could probably do it real quick. Well, if she only took $20,000 out, well, we can run that real quick. It's simple. And we say, all right. Now, I personally would still do the $30,000. I don't think, I mean, because what's going to happen here is when she gets 70 in 3 years, she'll have more Social Security income, which would mean effectively when she starts taking more out at that point, that's going to make more of her Social Security income, which is higher, subject to more taxation and whatnot. So I would still do the $30,000 and just bite the bullet at the $2,300 of taxes. But be it as it may, as either one is better than doing the whole $250,000. So that's nuts, because then she's going to lose with 20, maybe even 33% right off the cuff. Nah, don't do that. All right. So if we do, instead of 20,000, 25, we do 20. All right. So that's all we got to do now. Now we know it's going to be, this isn't going to be 31,000. This will be 26,000. All right. Yeah. 26,000. This is still 16,800 because her Social Security hasn't changed. So we take 26,000 plus 16,800. That's 42,800. So essentially 42,800. Only in this case, we got that's not 12,000. That's 10,800 times 50, which would be 5,400, right? 5,400 would be taxable. So of their Social Security, her provisional income, only 5,400 is taxable. So we take that 5,400, we add it to this 26,000 plus the 5,400, which means their taxable income is 31,000, or their AGI is 31,400 minus 27,000 bucks. We're just going to say $4,000. So they're going to pay $400 in taxes. So here they're paying $400 in taxes. So it goes $400 for 20,000, 1,300 for 25,000, and 2,300 for 30,000. If that makes sense. So in that case, they're paying $400. They're going to double. More than, they're going to do a 250% taxes. So from 400 to 1,300, now that's a tripling. So to take an extra 5,000 out from 20,000, 25,000, their income tax will triple from 400 to roughly 1,300. That would be a $900 increase on taxes. It's still basically a 20%, effective tax rate. If you look at the amount of taxes they have to pay relative to how much they're taking out, this is such a small amount. And I hate to say it's small. I mean, but come on, a couple $100 here, a couple $100 there of taxes. That's a big fat nothing burger. Either way, if they were to take 20,000 out, they're only going to pay $40,000 in income tax, $400 in income tax. If they're going to pay 25,000 out, they're going to pay $1,300 of income tax. If they're going to take 30,000, they're going to pay 2,300 in income tax. And then you just have that, they'd have to figure how much they want to take out, how much tax they want to pay. And that's how that works. Now, if we do it for a single, it's going to be worse, simply because a single, we can see that right there behind me, right there. 0 to 25 is nothing, where 0 to 32 is nothing for married people. 25 to 34 is only $9,000. That's subject to 50%. Where 32 to 44 is 50% for married people. And then anything over 34,000 is subject to taxation, 85% taxation. A lot going on there, I know. But the issue is It's just like anything. You got to practice. The more you do it, the more it'll just be ingrained in your head, and then you'll know how to do it. Just remember, it's a two-step thing. A lot of people think they just default that 85% of your Social Security is taxed, and that's stupid because it's simply not true. 85% of your Social Security is not subject to taxation. It completely depends on so many other things, and I think people forget that. All right, so let's see what kind of chats we have in here. Yeah, right on. There you go, Dan. So, yeah, I think that's about right. So basically, my man Dan is saying that basically $1,000. Yeah, so 20%. So basically $1,000. Hey, Dan, could you do it for single people too real quick? Would you put that up there? That's for married. So let's see what it looks like for single people. Assume everything's the same. Just use a single people tax brackets and a single people provisional income thing too, if you can. Looks like you got some kind of, you're using your spreadsheet genius. So basically, yeah, you're paying basically 20% increase. Yeah. Just I would even say everything the same, Dan. We could say they have $2,800 in Social Security as well. Everything would be the same. That way they can we can just kind of compare the two, if that makes sense. Because a lot of single people will have higher. Oh, we got a comment about cash flows. Notice in right capital last week, and investment accounts are being increased linearly by the average term for the year. Okay, right. All right. So it looks like he understood it. So just real quick with that, I know John says take the comment back. The Monte Carlo uses standard deviations, literally random sequence of events where linear is literally just linear. So there's two completely different things there. I think we actually talked about that a lot last week or 2 weeks ago. The last live stream we did for Subscribestar, I went into that pretty thoroughly. John, I don't think you were part of that at that point, but just the linear is just showing you if you have a linear rate of return on the cash flow. But Monte Carlo is what we'd want to use simply because it has that random sequence of events. Actually, it's pretty funny, not to sidetrack too much here. Actually, let me get back to the table. Hold on a sec. Hold on. It's easier for me to type. All right. And I know that's probably not making a whole lot of sense, my friends, for the Social Security stuff. This is one of those things, almost like gardening, making bread. You can watch people do it all day long, but until you actually do it yourself, you're never going to really quite grasp it. So I would just say take some time, crunch some numbers, and I think you'll be surprised at how much you understand after you do it for a little bit. It will take some time because you'll say, oh, yes, you always get, at least I do, I always forget, like, what's the difference between provisional income and then on top of that AGI. You always forget, like, look, they're two completely different things here, and you got to remember them. But you will, and you'll get it, and then it's okay. Now I can know how much can I start taking out if I took 25,000 out, if I start taking 40,000 out, if I did 40,000 this year and 20,000 next year, because next year I'll have a bonus check or something like that. No, right on. Until his whiteboard, right, Sandra? I mean, that's the issue about provisional income. Everyone forgets it. And the freaking thing that, but, I don't know, my presumption is you're not a professional, but the thing that ticks me off, Sandra, is that everyone, not only do they forget it, but then financial planners and the professionals. All right, so here we go. So Dan, whoa, look at that. Look at that. That's the widow's tax trap. Look at that, dudes. Freaking nuts. So if you're a single and you take a $30,000 distribution, everything else being the same other than you being single, you're paying $5,201 in taxes basically twice. You're paying more than twice. You're paying $3,000 more in taxes than if you're married. But we really care about the widows, says the freaking Nancy Pelosi and all those people. They all kiss my butt. Part of my French. It just infuriates me. I hate that crap. These guys drive me up the wall. Oh, look at that. And if you're taking 40,000 out, you're married, you're paying 4,400 in tax, and if you're single, you're paying 9,000. So basically, you're paying more than 200% more. That's nuts. All right, hey, Roxanne's got a question. All right, so let me turn the mic over to you. Roxanne, can you hear me? Oh, I got to unmute you. Hold on a second. Why can't I unmute? All right. Well, oh, talk. All right, there we go. Wait. Can you hear me, Roxanne?
Yeah.
Okay, cool. You're on. You're live on the air.
Guess what?
Yeah.
I didn't mean to. I thought I put my hand down. I must have hit it by mistake when I was looking at the chat.
Oh.
Sorry.
That's all right. I mean, while we got you, anything you want to say?
No, I'm just taking it in.
All right. Cool.
Thanks, though.
Yeah, thanks, Roxanne. Right on. And you got the email, right? So that's all. I mean, you're
Yeah.
here. Okay, cool. And
Yes,
by the way,
thank you.
yeah, right on, Roxanne. You got it. By the way, everybody, Roxanne made a good point a couple of weeks ago because I don't think y'all are getting notifications on YouTube. Some of you guys aren't. I don't know how it works. But anyway, and she said, why don't you send people an email? Well, she didn't actually say that. She said, it'd be nice to know if you're doing, email when you're doing the live stream, so we don't forget or something like that. So I said, that's a good point. So I will start emailing you. Oh, cool. Right on. Sandra says, hi, Roxanne. This is her first subscribe star. Right on. Anyway, I'm going to start emailing you all on my, on here, subscribe star on YouTube and subscribe star only. I forgot to put the link in the first email. My fault, guys. That was stupid. I was like, I thought I did. I just I'm sure Pablo got in the way. Like how I blame Pablo. But anyway, what I'm going to start doing is emailing everybody, hey, I'll be doing a live stream, either YouTube or here. And I do these every other Wednesday. Initially, guys, I thought I was going to do them every week. No, initially I was going to do them every month. And I was like, I was going to do them every week. Every week's too much. So I'm going to do them every 2 weeks on Subscribe Star only. And just for the new people like Sandra, and I think John B, I think is new here. The issue with Subscribe Star live streams is that I will put this on YouTube. So just, don't say anything personal about, here's my social security, Josh, and here's my house. And, I don't have any, I don't have any guns, and, I keep $100 in gold coins under my pillow. I don't say that because when I put this on YouTube, there's some losers out there, that's for sure. But, initially, I wasn't going to do it on YouTube, but to be honest, the YouTube stuff works for me. It does. And YouTube is, when people watch it and they watch the ads, I get paid. I don't want to, it helps with the algorithm. I know it's all personal stuff, but it helps. That's for sure. So anyway, but appreciate that idea, Roxanne. So just be advised. We'll start doing that. Thoughts on currency reset? Says, oh, wait, did I have a question on here? Oh, no. Thought someone else had their hand up. Al, did you have your hand up? All right, maybe just, oh, yeah, okay, here we go. Let me, allowed to talk. All right. Al, you should, not yet. It takes forever to unmute this thing. That is the weirdest thing, man. It says, all right, there you go. So, Al, you are live and in person.
Can you hear me okay?
Sir? Going on?
All right. I just want to make a comment. I took advantage of the COVID program with the mortgage to push my mortgage 3 months ahead of time.
Hey, you're fading out. Hey, there we go. All right, cool. Can you hear me still? Oh,
Can you hear me?
yeah, there you go. Perfect. Yep.
Okay. I took a program with the mortgage.
Yeah.
So I put my mortgage out 3 months, which what my credit union did, they pushed it to the end of the mortgage. The reason why I did it was in the process, I wait till after the 10th of each month, I could go in and make the same amount of payment.
It's fading out. I hear like the first 2 sentences, then it starts going back and a lot of feedback. I heard something about the credit union put it towards the end of the mortgage, but I wasn't quite sure what.
Okay.
Did you got your volume on by chance? I don't know. I maybe turn your volume down.
Okay, let me try that.
Okay.
How's that?
That's not, but keep trying. It sounds good. It just it sounds good the last couple of times at first too. But anyway, so you took the thing for your like a mortgage deferment?
Yes, I did
Oh,
it.
gotcha. Cool. All right.
Did
So,
it for 3 months.
and they put it to the end of your mortgage.
They put it to the end of the mortgage.
Gotcha.
But what I did was I wait to after the 10th of each month. I take the same amount of payment and pay it towards the principal.
Okay. Yeah. Gotcha.
Now, my other thing that I'm looking at is that's the reason why I put up the question. I want to get your feedback on this reset currency thing I keep hearing a lot about. What is your thought on that?
All right. Thanks, Al. That still ringing. I'm gonna mute you again because it's still ringing in my ear a little bit. Appreciate it. I'm not. So the currency reset. Trump said on Fox, we need an even playing field. Gold as currency. It's just never going to happen. It's never going to happen. They got too much power in order to manipulate the amount of money they're using. They're never going to be a gold standard again. It's not going to happen. Oh yeah. Okay. So Don says either Josh or the speaker has two devices in the same room. That's the feedback. Okay. Al, maybe I think you're on here twice. Maybe that's what's going on. So maybe you could hang up from one. I think that's what's going on. All right, gotcha. So there's two devices on there, and I see your name on here twice. That might be it. I just think that getting rid of the gold standard allowed the federal government to print away. That's for sure. And if you go back to the gold standard, it'll be right on Arvin. Arvin says, Al, to turn off your mic on the other device if it's on. That's all right. They're not going to change it. There's too much power. It's kind of like the tax code. They're not ever going to get a flat tax. There's just too much power in this stuff. To be able to manipulate the currency, to be able to manipulate the tax code, it's not going to happen. So I don't think it's going to happen. And Trump is who knows? We'll see. I'm not holding my breath at all. How are you gonna? The whole thing is how are you gonna do a gold as currency, and then have a stimulus package for infrastructure? How does that happen? That's weird. I don't know how that happens. But I was listening to a guy from Ireland on a YouTube, my man Dave Cullen, Cullen, talk about the global reset. It wasn't about currency, but about what everyone's pushing, the UN, the World Bank, the Davos crowd and whatnot, the IMF, about a global reset with we all kind of fall under the auspices of the one world government. And it's pretty, and I know that sounds conspiratorial, whatever that word is, but if you just listen to what these people say, it's kind of like the communists. This is what's crazy. They, the Gobbies told us explicitly they wanted world domination. It just so happened that Pope, Margaret Thatcher, and Reagan took power roughly at the same time to fight back, but they said it explicitly. And to say that that's what they said and we're trying to do made you a conspiracy guy back in those days. And I was a little bit before my time. I was only a toddler. I was born in 1970, but still, I mean, you didn't have to be a member of the John Birch Society to say the communists are out for world domination. And the same thing with the globalists. They want world domination too in a different way. It doesn't make one a conspiracy person to say, I'm just saying what they say. All right. So, but at the end of the day, the gold standard, if you went back to the gold standard, then you'd have no ability to manipulate things. And I just don't see it happening. Let's see. So can I come over? Okay, good. So let's go over to how to enter reverse mortgages and right capital. Yes. Let me answer Bob's question first. So Arvin, when it comes to barbell, what barbell do you withdraw from when the stock barbell yearly return is flat? Still withdraw from equity. You just don't want to withdraw in a down market. Yeah, that would be my thought process, Bob. I'd draw from the equities. Exactly. In fact, a guy named, I think it was Guyton, Jonathan Guyton, a number of years ago had written an article. Was it him? I think it was. Where he says, don't withdraw from stocks if they're down 10% or more. So something like that. I'm literally just pulling this out of my head, but something like that. Like, look, 10% is the magic number. If the markets are down 10, that's when you leave stocks alone. So But look, if you got, you know, let's say it just really the situation always dictates. So let's just say you you have, I don't know, a couple of years of bad markets and now we're flat. So you're down 22, you're down 8. Now you're flat. You take it from the stocks? I probably would not. I'd probably still take it from cash if you have any left. Okay, so let's look at reverse mortgages. Let me, oops, no. Okay, gotcha. Hold on just a second. I go to my screen here. I go to Right Capital. I don't think you guys can see this. So let me go and log in here. Blink. Yeah, okay, cool. So you can't see what I'm doing. All right, so, all right, hold on just a second. Let me log into Right Capital real quick. And we're going to go to, oops, there we go. We're going to go down here to sample. Oops. I'll go over here to Larry sample. All right. And we're going to open old Larry sample, or Lanny sample. That's his name. Lanny sample. Okay. Got to get his name right. Old Lanny. All right. Hold on just a second. And we're going to open old Lanny sample. All right. So let's get you guys back on here. We're going to share my screen. And we're going to share right there. Okay. There we go. Oops. That's not what I'm trying to share. Hold on a second. All right, here we go. Oops. Can't see chat when I'm on this. There we go, chat. All right, can you all see the Right Capital? Do a thumbs up in the chat if you would, or say yes or something. I guess I could go to this. All right, cool. All right, sweet. All right, so we got Lanny, and I'm gonna turn off the chat for a second so I can see. So what we're gonna do here is we got Lanny and Maggie sample, and what we're gonna do is we're gonna go to profile. I haven't done it for a bit, so I might be. We go to income. Add income. Okay, good. There it is. All right, so run to the dashboard. We go to profile. You go to income, and we go to this green button, add income, other. All right, so profile, income, click the button for add income, that green button, and then go down to other, and then reverse mortgage, if that makes sense. All right, so now we got reverse mortgage. All right, so what? One-time income. Okay, cool. So you got, and I haven't done all that much, but basically what you want to do, I'm going to unshare my screen real quick. Oh, I guess I can pause share. Oh, sweet. And we're going to go to retirement research. We're going to go to retirementresearcher.com. All right. All right. So now I'm under retirementresearcher.com. Retirementresearcher.com. We're going to go to resources, reverse mortgage calculator. Because what we're going to try to do is get a gauge of how much we can use. All right. So reverse mortgage calculator. And we're going to say we have a $300,000 home. We're just going to say no mortgage on it. All right. And let's just make sure that looks good. Okay, cool. So you put the stuff in the white, everything else is kind of is already max. So what you see is monthly insurance premiums already 0.5%. You can do the 10-year. They put the 10-year, they put the numbers in there for you. You can change them, but I just let the software tell me what it is. So they're essentially saying it's 2.75, 2.25. So that's basically 5% plus 0.5% for the mortgage insurance premium. So that's a 5.5% interest rate, if you will. We'll say the youngest eligible, we'll say Maggie is 65. We'll just use that for example. they're going to automatically put the principal limiting factor. You don't have to put that in, automatically done. And they're going to say you can borrow 43% against this amount right here, your appraised value. Well, it's actually against your equity, but in this case, we have no debt. All right, so then we're going to say we can do whatever we want. If you want to put a loan origination fee, you can. Insurance, initial monthly initial mortgage insurance is always 2% of the appraised amount, not 2% of the borrowed amount, 2% of the appraised amount, other closing costs, blah, 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 blah. All right, so at the end of the day, we can take $699 a month out if we want for the rest of our lives. So we'll use that. We're just going to round up and say $700 a month. We can take $700 a month for the rest of our lives. So we take that, we go back to Right Capital. We got the reverse mortgage thing up here, and we're going to say $700 a month. That's $8,400 a year. We're going to say it's recurring, and we're going to say it's joint. We'll say income starts 2020 and income ends end of both plans. We're not going to put any annual fee on there. Actually, is there an annual fee? Hold on a second. The shouldn't be an annual fee. It's the monthly insurance premium. I don't think there's an annual fee. I guess it depends on your lender, actually. So we're not going to put an annual fee, but we are going to put 5.5% as the interest rate because it is the LIBOR plus the lender's margin. So the 10-year LIBOR swap rate, whatever the hell that is, the lender's margin plus the monthly insurance premium. You add these three together, and that's what we're going to use for our interest rate, 5.5. Closing costs, we'll just say $10,000, and we'll link it to our primary resident right there, and then you hit save. All right, so now we know this will be tax-free income, and so what's going to happen here is we go to retirement, all right, and we're going to go to cash. Actually, I wonder what. Bear with me just a second. What do we got for the house? Oh, 230. Let's make this 300,000 just to keep it in line with what we have in the mortgage calculator. All right, so now let's go to retirement. We'll see what it looks like from an income perspective. And we're going to go to cash flows. And we got income flows right there. Why did it start? Oh, it started in 2024 because they're not 65 yet, 62 yet. Okay, gotcha. But we can see that's the income flows, and you can see it's tax-free. All right, so the income flows are tax-free. No tax payment on that, right, on that reverse mortgage income, and it goes for the rest of their life. Pretty cool, huh? So it goes for the rest of their life. Now, let's see what it looks like does the net worth of the more. All right, here we go. All right, so basically at 5.5%, you can see that's $8,400 the first year, but then it adds $275 in income and interest that you don't have to pay, and it keeps a running tally of the debt you have on the home, which is pretty freaking cool if you ask me. So basically, look at this. We got 324 is the value of our home when we're 2024. And we got $8,675 against it. All right. Now we just keep going until we're dead. And the value of the home at that point is $482, but the mortgage is $353. So our equity went from $300,000 down to $130. So we lost $270,000 of equity. But we also took, when I say loss, we have $270,000 less of equity, but we took $8,400 a year for 2024 until 2044. I guess that's when did we die then? No, I'm gonna die 2044, did we? 1 second. Net worth. I guess we did. All right. So we took 8,400 for 20 years. 8,400 was that 160,000? About $170,000. All right. So basically, we had $300,000 of equity. We took $170,000 of that out as a reverse mortgage, and now we're left with $130,000 of equity. So it cost us. We had $300,000. It cost us $130,000 in total equity for us to spend $170,000 in retirement, if that makes sense. I think that's a good deal. I'll take that because it's tax free. You're drawing income from your portfolio, from your equity in your home. I'm going to do it. Presumably, I don't know. We shall see, but certainly I'm gonna. and you can use that that reverse mortgage to spend on anything you want. You know, if you want to go and sniff stuff up your nose, more power to you. I say that facetiously, by the way. I'm joking, but you can do what no one says. Oh my goodness, Dave Ramsey says reverse mortgages are a scam that you're going to be put out of your house. Well, if you're paying your property taxes, you won't be. It's just that simple. So I like it. Now that we had a 2% appreciation on that property, by the way. Let's see real quick. Yeah, so I think Arvin asked about that. Does a 20-year term? Oh, yeah. Let's go back to that. Good question. Oh, forget my. Oh, okay. Well, let's ask that because all right. So Arvin says the 20. There you go. Thanks, Dan. Put the link in there. Does a 20-year term? So let's talk about that. Share screen. Good question. We're gonna go back here, and we're gonna go to reverse mortgages. All right. So basically, yeah, I kind of went through this kind of quick. Sorry. So you got 10-year payment. It's like an annuity. I don't know why they call it 10-year in term. A term I kind of get, but 10-year, that doesn't make it's an annuity. It pays for your whole life. Now, again, we in that sample right there, we weren't paying anything back. And let's actually go back on the reverse mortgage income right there. Annual fee. Does it have us paying anything back? So I'm not sure how you would, I'm sure there's a way to model this where you're paying it back. I guess what you, I don't know how you do that. Yeah, I'm not sure how you'd model it to pay it back. Oh, maybe go to net worth. I think we go to loan. I think that's what it is. Loan. Let's see. Mortgage. Reverse mortgage right there. Oh, gosh. Kicking butt and taking names. Look at that. Annual income. Let's see what happens when we do 5.5% interest. Why does it say annual income? Wouldn't it say annual, let's see, balance. I don't get what you'd want to put here. All right, so I probably shouldn't have celebrated. Income ends at end of plan, link to house, interest rate. Our balance is, I don't know. I mean, it's got no balance initially. Let's say $100,000. I don't know. We'll just use that for an example. 131. We'll say 131,000. I guess that's odd to me. But let's just see what it does here. And annual income is 8,400. I got no clue what this is going to look like. So let's see. All right. That's odd. All right. So let's go to cash flows. Cash flows. Yeah, see, why they total outflows, total inflows. That's doubled that up. That doesn't make any sense. That doesn't make sense to me. That I don't get how you pay it back. I guess you just have to manually put I don't get where you pay it back. Annual fee. Yeah, I don't know. That's weird. I don't get where it does. That's annual income. That's not annual debt. Yeah, I don't know. So that doesn't make sense to me. That's weird. But anyway, so let's go back to this. So essentially what we have is a term payment you can have. So this guy's saying, look, I only want 20 years of income from the reverse mortgage. I'm going to get $896 for those 20 years. It's like a fixed term. Whereas if I do a 10-year, I'll get as long as I live. And after 20 years, there might not be any equity left in your home. We just don't know. But a 10-year, you're going to get $700 a month for as long as you live. Where a term, you're only going to get $900 a month roughly for that 20 years. So it just depends on what you need there, if that makes sense. All right, cool. Hope that helps. Yeah, but it doesn't. No, I did that. It's Arvin, it doubled because it made you put income in there, but it didn't say to put any place for your debt repayment. So I'm not. That doesn't make sense to me. Well, one thing I don't get it. I'm so confused. It says loan, and then it says annual income, annual interest rate, your current balance, but had nothing in there for a loan payback. All right. Yes, Jill, I will put a link here on Subscribestar for later viewing. Yes, ma'am. You could add it as expense and a debt payment, says Dan. So let's see, expense and debt payment. Oop. Expense and debt payment. All right. So let's go to profile. Yeah, okay. Yeah, but no, I get that, but I mean, it's literally, there's a loan for reverse mortgage, but it doesn't have your monthly payment. It's just odd. I mean, I know you don't have to make it, but it seemed to me it'd allow you to put something in. Right on. But anyway, so Dan was saying you could add to your, it has to be your primary home. Yeah, it can't be an investment property. Right on. It said, and Dan was saying it's right. If you wanted to model it, just put as a loan, as an expense and debt payment. 100% right. It's just weird they have this drop down for reverse mortgage, but there's really no place to pay it back. Strange. All right, what else we got on here? No, both spouses do not need to be 62. So when I'm 62, I can take it, even though old Char, my beautiful, is younger than me and much better looking too. But so we can take the reverse mortgage, but you know, she's on the deed, so she'll have to sign for it. But it's basically, Sandra, it's your payment is based on the age of the youngest. All right. So, you know, let's just say old Nick is 90 and you're 62 because Nick was robbing the cradle. It had nothing to do with Nick's age. It has to do with you being 62, if that makes sense. Because what's happening is they're going to pay the income on the youngest of the homeowners for the rest of your life. And so they have to adjust it accordingly to what they think the equity. When they say they, I mean, this is a government guaranteed, so it's very conservative. They're going to say, we think, you know, this is how much you'll be able to get out of it over a certain amount of time without us having to eat it. I mean, the government insurance program, that's the monthly insurance premium, you know, they don't want to have to eat these homes. They don't. They want you to have enough equity to sell your home at your death, or if you move out, to be able to move on to better, bigger and better things, but they don't want to have to, you know, come and repo your house or anything like that. Yeah, and here's the link, retirement researcher. Yeah, right on. Thanks, Dan. Okay. All right. Cool. It links. Oh, it links to the debt as really. All right. Let's take a look. So Dan is coming through again. So if we go to expenses, add expense. I think it said other. Wait, what do you say? Expenses, other, extra debt payment. Oh, right there. Oh, man, look at that. That is sweet. I don't care what they say about that guy, Dan. And trust me, you don't want to know what they say on Twitter about him. Look at that. All right, so let's do this. That's fantastic. That is, what the hell? That is the weirdest thing. Oh, sweet. All right, so basically what he's doing is once you get the reverse mortgage modeled, you go to profile, expenses. What did I do? I went to add expense, extra debt payment, and it's going to give us this right here. And it's already going to be on the drop down for reverse mortgage. We're going to do annual, we'll do recurring payments. We're going to do $200 a month. Oh, that's freaking fantastic. And we're going to do it until end of plans. We're going to do a joint. There we go. Oh, that's fantastic. All right, so let's go to cash flows, see what this sucker looks like. All right, we can see it's dropped down because we got an extra $200 a month going out the door. All right. Expenses right there. Freaking awesome. All right, so now let's go to, so remember we had, $480,000 was the net value of the home at our demise, and we owed $357 on it, if that makes sense, something like that. So let's see what it looks like now. Let's go to net worth. Oh, because I took out, all right, hold on a second. We got to go to right here. Let's go to get rid of this guy. Oh, right there. All right, hold on a second. All right, see what we got here. So let's go to net worth. So there's our income. All right. So what we got to, okay, cool. So what we got, all right, good. So we're learning stuff here. Hope you all are watching this and makes some kind of sense, because this is a learning experience for me too. So we're going to go to income. We're going to get rid of this reverse mortgage income. I don't get that. So what we're going to do instead is we're going to go to net worth. We're going to add account, loan. Wait, is that what I just did? No, right? No. Okay, cool. We're going to go to reverse mortgage. We're going to say our annual income is $8,400. Our interest rate 5. I don't know why they had two different categories. That doesn't make sense, but whatever. We'll figure it out. I don't get the balance thing. Say the balance is nothing. Say primary home, income ends, end of both plans. Okay. Hey, big guy. What's up, dog? Do you just go outside, you big boy? All right. So now we're going to do that. So now we go back to expenses. What a good boy. All right. Other expense. Nope, that's not what we want. No, don't you growl at me. No, sorry, Bob. No. Oh. Huh. All right, so that didn't. Okay, so let's do this. Let's try this. That didn't work. So what we got to do then is go back to get rid of that loan right here. Let me just try something real quick. We'll put $100,000 in there and see what happens. Did you all hear the bunny? Well, Pablo, always up to something, that dog. Extra time. But why do we? All right, let me try. That doesn't make sense. But why do we use the loan for? Maybe it's because I don't like how you had to put a balance in it. Let me try something else here, guys. I know this might seem really childish or whatever the word I'm looking for, boring. But let me try getting rid of this real quick. I want to try something else. So we're going to go to here. Then we're going to go to income. We're going to go back to add income, reverse mortgage, and we're going to say we got annual amount is our income, $8,400. It's going to be joint. We're going to end it when we both die. Interest rate's 5.5. Oops. Annual fee nothing. Defaulted there. Closing costs, we'll say $10,000. All right. All right, so that's recurring. That looks good. All right, cool. So now let's do this. We're going to go that, and then we're going to say to expenses. Extra payment. Okay. All right. We're getting someplace. Monthly amount, 200 schmackers. All right. Joint. And ends. Okay. A loan doesn't exist. Ah. All right, so that's maybe the income. Oh, so there's 62. You think that's it? Okay, let me try that. All right, so let's change their ages. Let's try that. Good point. We'll make these guys okay. Good point. So let's try that. Retirement. Oops. Expenses. Go to expenses. Well, So that's it has to be then. All right, so we got the income from it. So you got it. All right, let's try this then. So that didn't work. That's odd. Obviously, I'm doing something wrong. So let's go back to loan. We're going to add the loan here. And we're going to do reverse mortgage. And let's not have a balance. Let's just see what happens. So we're going to do, okay, link. We're going to say interest rate is 5.5. We say our annual income is 8,400. All right, so now we're going to do joint. All right, so now let's go back to expenses. Yeah, that's the weirdest thing. Maybe I got to go here. Well, maybe I got to put something in here. Let's try the 131. I don't get why that doesn't make sense to me. Go expenses. There it is, but why? $200 a month. Oops. Do that. Do recurring. Doesn't make sense. I mean, why are we using 130? I don't get it. All right. I guess they have to have something to pay back, I guess. That's just odd. All right, so let's take a look at cash flows first. That is odd. All right, so here we got cash flows. All right, there's expenses. There's the inflows. Okay. That makes sense. Net worth. Yeah, see, but see here you're going to have, look at that. I mean, it's not good. Yeah, right here, our house value is less than our mortgage, which simply is not right. So I wonder if we go back to profile. And we go to loan. But if we just do $1, it's gonna be paid off, right? Okay. So you can't have a zero balance, but I just did $1 just to get on the board. I got the income, I got the expenses. Okay, that's good. All right. And then you go to net worth. That looks good, man. Because you are paying $200 a month, so you go to net worth, and you that $200 a month over the course of 20 years is going to cost you. I don't know why you do that, by the way, but it's, whatever. It's going to cost you $48,000, so you're going to net 120 in your reverse mortgage income, and then you're going to have more, equity to give to the kids. So okay, that seemed to work. It's an odd situation, but okay, good. I like that. I guess you could probably even go profile expenses, and you could probably say we're going to do $500 a month, and you could probably add, you can add extra ones. So you can say this year we're going to do $500 a month in 2026. 2027 we'll do $800. You can do all kinds of stuff. All right, that's interesting. It's boring, I get it, but that seemed to work. Yeah, so you can't do a reverse mortgage until the youngest person is until someone's 62, the oldest person, excuse me. You got it, Arvin. I just learned a lot right there. I mean that was fantastic. I'm not sure I got it all, but we were able to square that, circle that square peg, if that makes sense. Is that right? Anyway, I'm a fan of reverse mortgages. You got equity in your home, and look, I'm not saying you even have to use it, but why not even to get the line of credit? If I may, that we'll cut it off here in just a second, but if I may, yeah, I hope so. It covered it. I don't know if it answered it, but it certainly covered it. let's just use, these guys, Lanny and Maggie. All right, so they got a $300,000 home. They're appreciating at 2% a year. So, all right, let's just use that for example. So, $300,000 home, and they're going to get 2% appreciation. And 10 years from now, that'll be worth $365. So, what if they waited till they're till the 10 years to get the line of credit going? It's going to cost them 2% on 365, which will cost them times 0.02, 7,300. Whereas if they would have done it at 60, would have cost them $6,000 because it's 2% on the appraised amount. And if you know you're probably going to have a reverse mortgage at some point, I don't get why you don't just get it started right now and just get that sucker building, because what happens is your line of credit is actually growing as your appraised value is growing as well. All right, so even if you're not taking it out, you're getting more and more growth on your line of credit. It doesn't cost anything. I mean, it does cost something. I mean, because you got to pay the initial mortgage interest, insurance premium, which is 2% of the appraised value. And so if you think your house is going to be appraising more in the future, and on top of that, you want a growing line of credit, why not just take it out now? Just pay the, $10,000, or I guess in this case, $6,000 closing costs, and all of a sudden done, probably $10,000, lock it in. And that way, it's there. Why wait until we have a chaos like we have in 2020 where people are, trying to find any income they can? I don't know. If you think you're going to stay in your home, for at least 10 years, I would do reverse mortgage. Even if I don't use it, I would have a line of credit at the ready for you, for sure. Hope that makes sense. All right. Any last questions, thoughts, comments, guys? I appreciate y'all being here. We definitely covered a lot. We covered reverse mortgages a whole lot more than I ever would have thought, but that was fantastic. I had no clue. None. There we go. Updates, right capital, gift information, update default healthcare. Very cool. Updates, right capital, gift information, estate planning, investment income, and cash flows, updated default healthcare, long-term care cost. I don't know if y'all can see that. You might want to click on that and bookmark it, because that's the right capital update stuff for sure. Good stuff, Dan. I answered Bob's question about the barbell. He just said if it's flat, what would I do? It depends on what the previous couple of years were before that, guys. I mean, if we had two crappy years like 2001, 2, and 3, and then we'll just 2000, 2001, and 2, we'll just say the next year is flat. I'm not touching the stocks if I have any cash left. Just because even though it's flat off a pretty significant decline. So I wouldn't do that. But if we had a couple good years back to back and it's flat, I'm still taking it from the stocks for sure. It just, the situation always dictates all this stuff for sure. So, well, I guess that's it, guys. Appreciate y'all being here. Like I said, hey, that's right. Just real quick. All these friggin' protesters can kiss my big fat butt. I'm sorry. America is the place. Why are people we're such oppressed here? But come all you immigrants here. It literally, these guys are all insane. And the idea that Mount Rushmore is a semblance of white supremacy, just all these guys are nuts. I'm sick of it. I'm just sick of it. I'm sick of having to defend America like America is evil, when America is a place where, and you all know it, I know it, we all know it. All these people come here to escape oppression. They don't come here from freedom to be oppressed. It's always one direction, always people coming in here, not the other way around. And I'm sick of it. I'm so fed up with these freaking left-wing clowns. And I wish the freaking Republicans would get off their tushes and defend the freaking country for once, man. Gosh, this guy, Mike Braun, I tell you that, I'm sitting there thinking, dude, do you have any freaking spine? Have you ever had to, I don't understand why it's all relying on Trump to be the one guy to stand up for the country. It's insane to me. And I mean, if Biden was smart, which he's not because he doesn't have a brain, but he would do a Bill Clinton, Sister Soldier moment. That's what solidified 1992 for Clinton. They realized he wasn't as radical like the Democrats were before. But now they're even more radical. It's insane. And I mean, voting for Republicans look at Steve Ducey in Arizona. I thought that guy was righteous. Yeah, he's freaking falling for it too. I'm just like, you freaking fool, man. Stop with this freaking shutting down bars. It's not people. Oh my! Young college students getting sick at bars. No one's dying, man. No one's dying. They're dying in nursing homes. That's where they die. And you're not sending people to nursing homes like freaking Half Whitmer and Cuomo did. Thus, they're not going to die from the freaking coronavirus. Some people will. If you're sick and you're worried about it, then take precautions, just like we say to our kids with peanut allergies, because if they get peanuts, they could die. And peanuts float around the air. So you eating peanuts could actually affect my children. That's a fact. We don't mandate that you wear masks or keep your peanuts under lock and key. We just say to my kids, just be careful, carry an epi. But you could die as a young child, not as being forced in a nursing home. Man, it freaking infuriates me. I don't get why the Republicans don't see what the hell's going on. It's crazy. Yeah, you got to stay away from carrots, John, because if you eat carrots, you will die. I love what's her name, Chrissy Nome. Oh my goodness, I'm moving to South Dakota just so I can vote for her for governor. I hope she runs in 2024. The only people I like right now are Rand Paul, Thomas Massie, and Chrissy Nome. I donated to Ted Cruz back in 2016. I was Cruz before I was Trump, and I still kind of not upset, but I still wish Trump would have got off Cruz's stuff because Cruz is the one guy standing up to this. I mean, some of it's showmanship, but look at Trump, man. Just close our bars again because the bars are what's causing people it's just freaking things. Sorry, I'm just sick of this crap. And yet where we are, it's all man, I'm telling you right now. And going back to my man Dave Cullen, he said the MIT, they said, yeah, we're going to go through this continuum, shutdowns, let go, shutdowns, let go. Just get people used to that. I'm thinking, and why do people put up with this? It's insane. And then and then we got a swine flu coming out of China that we don't know if it's human-to-human contact yet. They're saying they can't be transmitted human-to-human contact, but that's what they said about the freaking coronavirus too. World Health Organization said it can't be transmitted human-to-human, so don't worry about it. That's what they said. So now they're saying the same thing about this H1N1 strain, a different strain of swine flu, can't be transmitted from human to human. So, okay. And my daughter, my oldest, got hit with swine flu back in 2009. Swine flu killed, a couple thousand kids, at least 1,000. Coronavirus has not done the same. And yet we did nothing under swine flu. Well, we all know why. Because Obama was in office and it was an election year. All right. Enough of that. I'm out of here, my friends. 9 o'clock. Signing off to you. Happy 4th of July. Go to your local bar and partake in alcoholic beverages, use some fireworks, and tell all those guys to go to Mount Rushmore. And if the freaking commies come, someone needs to go up there and stand firm because I'd love to see the commies go to Sturgis. Let's see them go to Sturgis for the motorcycle. I don't ride a motorcycle, but I'd love to see that. Yeah, it's not gonna happen. We'll see you guys. Thanks everybody. Thanks for being here, and thanks for being subscribers, sponsors. See ya.